Hiring a fractional CFO can completely change your business. It can also be a very expensive mistake because most founders don't actually know when they need one, what they should expect, or most importantly, how to tell if they've actually hired the right person. Me personally, I have been a fractional CFO for the last 6 years. I have also built and sold an accounting firm. And I've worked with a number of clients in different industries, and I mainly specialize in working with clients in the professional services industry. And throughout my time, over 18 years in finance in total, I've seen all the challenges you can expect: growth challenges, hiring challenges, cash flow challenges, how to navigate difficult situations, etc. I've seen what works and what doesn't work. And coming up in this video, I'm going to show you exactly when it makes sense to hire a fractional CFO, what most owners misunderstand about the role, and the specific questions you should ask before bringing on a fractional CFO, so you do not get this decision wrong, because if you can get it wrong, it can be a costly decision. So when does it make sense to actually hire a fractional CFO? Generally, what I say to people is, if you are below 1 million revenue, you don't need a fractional CFO. If you're above 15 million revenue, you probably don't need a fractional CFO. You may be wondering why. So if you're below 1 million in revenue, to be honest, you should be able to manage your business finances okay with just your accountant and a bookkeeper. And it's arguable whether you would get the full value of a fractional CFO. And if you're above 15 million revenue, you probably need somebody that's a little bit more full-time than a fractional CFO, just purely due to the size of your company. And the fractional CFO really sits in that sweet spot between 1 to 15 million. Reason being, you are getting that executive level support at a fraction of the cost and a fraction of the time. You don't need somebody super senior executive full time. You need their experience on a part-time basis. So in that 1 to 15 million space, that's where a fractional CFO really comes into play. And in terms of what you should be looking out for in a fractional CFO, one of the key things is they have sector experience. For example, I work with professional services, B2B companies, so law firms, marketing firms, etc., anybody that sells a service as opposed to a product. If a client came to me who is a construction company, I would say, sorry, I'm not a good fit. I have absolutely zero experience with construction companies. That means I don't know the sector. I'm not the right guy to help. There's specific fractional CFOs in the construction industry who have done this as their bread and butter for the last 10, 15 years. They're a better fit than I would be. So one thing to always be sure of is that the fractional CFO you choose has direct sector experience. The second key thing you want to look at is, has this guy or gal actually been a CFO before? Because the problem is, fractional CFO is quite a new term on the market. Anybody can call themselves a fractional CFO. Somebody who's taken a bookkeeping course for 2 weeks could go on LinkedIn and say, hey guys, I'm a fractional CFO. So it's really, really important that you actually research the fractional CFO. Have they held a CFO title before? Ideally, they want to be some kind of qualified accountant, and you want to make sure that their experience stacks up to your specific sector. I cannot stress how important that is. Get a fractional CFO for your sector. What do most business owners misunderstand about what a fractional CFO actually does? Very good question. So let me answer it for you. So what does a fractional CFO actually do? Well, this is best explained through an example. So I'm going to share a screen and we're going to talk it through. So what this is the map of a finance function. So if we start from the bottom, you'll see down here, we have transaction processing. This is generally what a bookkeeper does. So this is reconciling the transactions on your accounting system, maybe making payments to suppliers, matching up invoices, etc. Second part of this pyramid is reporting. This is what your accountant is responsible for doing. So they do your taxes, your VAT returns. They'll put together your payroll, your annual accounts, your annual tax return for your business, etc. So transaction processing, bookkeeping, reporting, your accountant's job. This is what a fractional CFO does here. These 3 areas of the pyramid: budgeting and forecasting, analysis and insight, and strategy. And in terms of budgeting and forecasting, these bottom two, transaction processing and reporting, they look at the past. Budgeting and forecasting looks at the future. So we're planning out what is the next 6, 12, 18, 24 months look like for your business. The next one is analysis and insight. So we're kind of diving a little bit deeper into the finances of the business. So is your gross profit margin a little bit lower than the industry average? Let's find out why. Maybe your staff are only working at 60% utilization rate, which might indicate that your staff do not have enough work, which means we need to really focus on increasing revenue. There's a hell of a lot more in terms of analysis and insight we could dive into, but for the purposes of this, let's just skip to strategy, because strategy is the most important thing. If I can sum up the role of a fractional CFO in one sentence, it's linking finance to strategy. I'll repeat that. It's linking finance to strategy. That's what a good fractional CFO should be doing. Fractional CFO takes care of the budgeting, forecasting, analysis, and insight, and then links that to the overall company strategy. And that will have inputs from marketing, operations, sales, etc., etc., etc. And the fractional CFO translates all these different inputs to the wider company strategy and then shines a financial lens on it. So for example, sales departments say, okay, we need an extra 3 salespeople. We expect them to generate X amount of revenue. I would model that out and then run different scenarios. Okay, if the sales team hits 100% of their targets, here's what our revenue looks like. If they hit 50%, here's what our revenue looks like. Here's what our cash looks like. Here's what our tax obligations look like, etc., etc., etc. And it's all about linking finances to the strategy of the company and what we're looking to achieve both on in the short, medium, and the long term. So what should a good fractional CFO, keyword good, be doing in the first 90 days? Any fractional CFO engagement has 3 key areas. Number 1, discovery. Number 2, implementation. Number 3, business as usual. So the first 90 days are all about the first 2, discovery and implementation. So what I'm going to do now is really briefly walk you through how I do my discovery process with my clients. And it's important to note here, I do not charge for this piece of discovery. This links back to one of the previous comments I made before in terms of anybody can call themselves a fractional CFO. I like to prove my value up front to my clients and show that I am the right person for the job. So let me share you a little peek on how I do discovery, which is quite unique. So if I share my screen here, so what I do here is, this is a live mind map. So I can type something out here, it'll appear on the screen. I invite the senior management team of any potential client I speak to onto a call for 2 hours. And what we do is we run through this mind map live on the call. And we have sections like the infrastructure, the customer, the financial, the systems map, and some key questions. And as my client is answering these questions, I will be typing out in real time. When I'm not typing garbage, I can type pretty quickly. And we just kind of run through this. So we get to understand the business. So what is the value proposition for this business? What are the key activities it does? Who are the key partners? What are the key resources? Then we have a look at the customers. So who are we actually creating value for in terms of our customers? Then we have a look at some marketing. So how are the marketing channels linked together and how do we get new customers? And then how do we actually establish and maintain relationships? Then we have a look at some financial high levels. So we kind of look at the revenue streams, pricing structures, profitability, seasonality. We have a look at the cost structure. We have a look at the cash flow. We have a look at some margins. Then I like to do a systems map. So what I'm doing here is I am getting the tech stack of the business I'm working with, which is quite important. And then we come on to the interesting part of this, which is the key questions. Again, remembering before when I mentioned fractional CFO, it's all about one thing, linking finance to strategy. So we want to find out about the business goals. What is the growth plan? Is it scale aggressively? Is it slow and steady growth? There's no right or wrong answer to that question. What are the 3-year goals of the business? When did shareholders plan to exit the business? And then some challenges. Biggest frustration right now, number 1 priority in the next 3 months. And sales and marketing, what are the issues? operations and staff, what are the issues and how is the culture? And quite funny that even though I'm a fractional CFO, sales and marketing and operations and staff often take up most of this mind map here. And if we had a completed version, if we would have zoomed out at the end of 2 hours, this entire screen would be populated with a huge web of information about the business, which covers the infrastructure, the customers, the financials, the tech stack, the key questions, etc. Then from that point, what I do is I will then say to my client, okay, let's sign an NDA. If you can give me guest access to your accounting system, send me any corporate presentations you have, send me any budgets and forecasts you have on Excel or Google Sheets or whatever, send me your current business plan, and send me anything else that you think might be useful for my analysis. So my client will send all that over. I have all this information from the mind map. I will then go in and do an absolute deep dive on everything. Deep dive into finances, deep dive in all the information sent over. I have all the information from the mind map. Then what I will do is I will put together a long form strategy document. That long form strategy document, generally around 3,000, 4,000 words, no AI. I write it myself. You wouldn't see any EM dashes. You wouldn't see it's not that, it's this. It is actually custom written by myself, and usually takes me around 15 hours. By the time I do all the analysis, put everything together, then I send it to the client. Again, that's free of charge. I don't charge for that. Reason being, again, a lot of people call themselves fractional CFOs. I like to prove I'm the right guy up front. So that is how I handle discovery. In terms of implementation works in a few different phases. First phase of implementation is always clean data. Accounting data is garbage in, garbage out. I can do all the forecasts, give you all these pretty graphs, pretty pictures. Oh, your business looks so wonderful. But if you do not have clean data to start with, then it's garbage in, garbage out. So the first month is generally spent reconfiguring the data. So the accounting structure in your accounting system, reconfigure that so it makes sense for forecasting. Do a deep dive on the current data. Is the P&L up to date? Is the balance sheet fully reconciled? Do we have what's called a month-end close procedure in place? That means double checking everything's correct every month, as opposed to just once a year for the accounts, which is generally what an accountant does. And then once we have that in place, then we come to the fun part, which is using some fancy financial tools. So I will share with you a fancy financial tool, and this one is called Fathom. So let me share screen right now. There's our friend, the mind map again, but we're going to skip. So this is a tool called Fathom, as I mentioned before. And the ability of this tool is it does something that's called a three-way forecast. So a three-way forecast means if we update something in the profit and loss, the balance sheet and the cash flow will update automatically. So what that means is if we update revenues, so let's just use, this is a demo company, by the way, this isn't a real client. So we wanted to update this number here for coffee revenue. We update it there. And if you saw down the bottom there, the cash already increased. And in the background, it will also calculate the taxes correctly, the VAT correctly, etc., etc. Everything's all linked together. So we can also use this to make different decisions. So if we were looking to hire some staff, for example, we could kind of toggle this on. And then if there was data in there, it would update our staff salaries, our taxes to the government, how much tax is saved on the salaries, when the wages go out, when the pensions go out, all that kind of good stuff. Everything's all linked together and modeled. So this gives us the ability to make different decisions on the business, turn them on, turn them off. How does that impact the numbers on the profit and loss, the balance sheet, and our cash flow statement? So we have a three-way model, which is incredibly important. We're not just looking at profit and loss, we're looking at the business as a whole. And we've got lots of other cool things we can do as well in terms of goal seek. So let's say this company, they wanted to increase their, let's say their operating profit from 28.7 to, I don't know, 50, let's say. What are the key things for this business that would impact getting to that number? So if we increase the price by 1.13%, we get that close to our goal. if we decreased our expenses by 1.2%, we get that close to our goal. So now we can see what the main drivers are for this business and what we would need to tweak or change to achieve the desired result. So this kind of comes into the implementation phase. We're really kind of getting into that analysis and insight part of things. And we also have, every month we put together a report, and the report looks a little something like this. So we would have we would have our, what's called here, variance analysis. So what did we expect to happen this month in our forecasts? What actually did happen this month, and what's the difference? And for every line where there's a difference, we want to know what happened, why did it happen, and so what? What does that actually mean? It's all good saying, okay, that number's less than our forecast number, but why did it happen, and what does it actually mean? What are we going to do about it? And we go into this by detail on each account line. So we've got revenue there, we've got cost of sales there, we've got all our expenses. So let's choose a random example here. In the month of June, we expected to spend 27,560 on rent. It was actually 26,551, 1,000 less than we thought. Why? Maybe the cleaner didn't come round that month. Maybe they were off sick. And that's why it's £1,000 less, because the cleaning fees are included in the rent area. Could be a number of reasons, but that's just one. So we would look into this into a lot more detail, and the numbers start to paint the picture of the business. And this also validates whether we're forecasting good or we're forecasting bad. If we're forecasting good, this number should always be as close to zero as possible. If we're forecasting bad, that number will be hundreds of thousands of pounds out. And then I know, and importantly, my client knows, our forecasting, something's going wrong. One of our assumptions about this business is wrong. So now we need to fix it. So this is a really good sense check. And then we kind of have a little comparison against last month. And then we have some forecasting. So this is what happened all of last year, and this is what we expect to happen for the end of this year. And then this report goes into a bit more detail in terms of total revenue, gross profit margin, operating profit margin, our performance this year. Green shaded is what's happened. Unshaded is what we expect to happen. So this is really easy to see for a business owner. Looking at trends can be a lot easier to see in visual format, as opposed to kind of just looking at an Excel spreadsheet. And then we have a similar trend for cash flow. Again, a lot easier to see cash flow. The information here is a little bit crazy because it's demo data. But if it was not demo data, this company would be doing quite well based on that graph. And then we just kind of dive into a bit more detail in each section. Revenue, kind of what was the revenue made up of, cost of sales, a breakdown, expenses, a breakdown, etc., etc., etc. And for the rest of the report, we just dive into things in a bit more detail for each key section of the business. So here we have revenue. So total revenue for the year, this month, last month, green shaded, what has happened, unshaded, what we expect to happen, a mix. So what makes up our revenue for this business? Coffee, food, tea, merchandise, etc. And then we just go into a further breakdown for each key section. Cost of sales, gross profit, expenses, net profit. And this is where we would include non-financial data. It's a demo company, so nothing here. So for non-financial data, we not only want to see finance data in this report, we want to see non-financial data. So what I generally say is to the different departments in the business, so sales, marketing, operations, HR, etc. I will say, hey guys, can you give me your top 5 to 10 data points of what's important to you? So for the marketing function, it might be number of unique website hits. It might be number of social media followers. It might be number of leads converted, although that would be more of a sales one, but you get the idea. We get the top 5 to 10 KPIs for each department in the business, and we include them in this report and visualize it like the finance data. So not only are we having a monthly finance report, we're actually having a monthly business report tracking the entire business, because looking at the finances in isolation can be dangerous. We need to see what's the non-financial data as well, so we can get a kind of overall picture of this business. And then further down, we just kind of break everything down line by line. If either the client or myself wants to see things in detail. That's the majority of the implementation phase setup. So just to round up, it's discovery first, mind map session, strategy report. Number 2, implementation phase. Implementation phase goes clean up the data, build the reports, build the forecasts, build the final board pack, bring in the non-financial data. And from that point onwards, it's business as usual. And business as usual generally means we update our forecasts every month. The fractional CFO helps with ongoing queries. For example, if the company wants to buy another company, my client wants to acquire another company, I will help with the acquisition, the due diligence. So yeah, that is what a good fractional CFO should be doing and how a discovery, implementation, business as usual phase usually runs. And last up, if you're interviewing a fractional CFO, what questions should you ask? Well, if it was me, here's the questions I would ask. Number 1, tell me the most important thing about being a fractional CFO. Remember, the answer is linking finance to strategy. If you don't get that answer, it's not a good sign. Number 2, tell me the key industry metrics for my type of business. A construction company is going to have much different metrics than a marketing agency. You want to make sure the fractional CFO knows your industry. Number 3, what's the 90-day implementation plan? We've already covered my implementation plan, so you want your fractional CFO to have a clear idea of their implementation plan. Next up, do you work on a retainer or a day rate? I personally work on a retainer with all my clients. Some fractional CFOs work on a day rate. Make sure that's locked down and you're happy with the arrangement. Next up, what's your last success story with a client? Any good fractional CFO should, off the top of their head, be able to tell you how they successfully helped a client. They shouldn't even need to think about it. It should be immediate. Answer should be, oh yeah, I work with XXY. Here was the problem. Here's what I did. Here's the outcome. They should be able to answer that very quickly. And finally, an important one, can I speak to at least one of your clients for a referral? Again, that links back to anybody can call themselves a fractional CFO, and any good fractional CFO who keeps their clients happy should have no problem asking one of their current clients, hey, can you spare 15 minutes? Chat to a new prospect of mine? It would really, really be a big help. So those are the key questions I would ask. And finally, just to round off, if you've enjoyed this video, like and subscribe. And also, if you want to get in touch with me directly, my LinkedIn is in the description. Feel free to reach out, connect, pop me a message. Let's chat. Thanks.